Hey everybody, welcome to another edition of Tuesday Talks with Ashley Hanna and Angelo Datseris, your Charlotte metro area real estate team. Angelo with the mortgages and myself with all things homes buying and selling. Thank you so much for tuning in. As always, if you have any questions that you'd like us to answer today during our show, feel free to drop it down below and we will answer your question. Second, while Angelo hops on, and then we will get started with what we're going to talk about today. Hi.
Hey, what's going on?
How's it going?
Another Tuesday.
Another Tuesday.
Yeah, how about you?
Good. I feel like it's like a marathon to get ready for this, the few minutes right before I'm running around like a lunatic. I'm a little out of breath right now.
Right. That's all good.
Yeah.
That's all good. I just want to make sure there's no names up there. Okay, good. Big news with Zillow. Zillow with they're getting hit pretty hard with houses they're underwater on. They put a halt on basically purchasing any homes, which I think is interesting because I think they're getting beat up right now because they're not making wise decisions. So,
well, here's the deal. So I just pulled up an article about this. So what we're referring to is Zillow, as everyone knows it affectionately, where people go on look at houses online, whatever. It's the most used app out there for real estate. Good for them. They got into the home buying arena, much like your Open Doors, your Knox, things like that. I think they were trying to fill some shoes that they're not equipped for. They are more of an online portal. They're not local boots on the ground real estate agents, which is important when you're buying and selling real estate. It's very local.
right.
So the headline for this article that's on Yahoo Finance, it was published today at 11:49 a.m., says Zillow shares drop after home value leak and sell-off announcement. So, I think that many people don't realize that Zillow purchases homes and their kind of model is to fix and flip them, which means that they're going to buy it for lower than market value and then do minor changes and then list it back on the market for substantially more than they paid for it. That at least is the model. So I always say to my clients, because everyone looks at their Zestimate, right? Everyone goes online and they want to see their Zestimate.
I don't know how many. You're right. I don't know how many times I get a call. It's like, oh, my Zestimate. I mean, they've coined that phrase.
Yeah.
It's funny that they have that much of an influence. But I'm sorry. Go ahead.
Which is fine, right? Okay, that's fine. That the information's out there. I'm not gonna pretend like it doesn't exist because hell, I look at my own Zestimate too. Whatever. So I include that when I'm talking to my clients and I'm pricing out houses. But they also are gonna try to make you an offer. And I just tell my clients, I'm like, please have representation. Please. Don't say that you want to, 9 times out of 10, the offer that you are being offered to make you click on something isn't what it's going to be down the road. And I've seen a lot of people get paid less than they thought, deals fall apart, people end up homeless because they just didn't know what they didn't know. I'm not saying these places are bad. I think there is a time and place for all these things.
They serve their purpose. They are not for every transaction. They're not. They're just not.
Right. And I just want people to understand what they're getting into before they click those buttons and they go down this rabbit hole of all of a sudden they're getting bombarded with phone calls and they're like, oh shit, I just sold my house. right? I
Right.
mean, like,
Yeah.
let's take a step back and make sure you just consult somebody that you trust and that's local that can help you. Because now they're,
Do they,
go ahead.
go ahead.
No, go ahead.
Do they, I was gonna ask you, do they do their due diligence? I mean, maybe they do online research, but do they actually send like an appraiser out there? Do they do like a BPO? That's kind of more your world, so I don't really know how they make their decisions on price. So do you know kind of what goes into the mechanics behind how they come up with their value?
So I know that it's very AI driven, which I appreciate, but I think that in some areas they have more information than they do in other areas. Therefore, the
Right.
pricing is a little bit more accurate. I also know that like when somebody wants a price on their home, they do have a team of people. I've actually seen the Charlotte um, boots on the ground, I guess, like the area where
Right.
the war room where there's a bunch of people in front of computers that are putting together broker price opinion. Like Zillow sends these people the request and then they kind of do a BPO from that request. So that's a little bit more honed in. So
And explain to everybody that may not be real estate, savvy. What is a BPO?
a broker price opinion. So that's when a broker price opinion, a comparative market analysis, a property analysis, those are all very much the same thing. That is basically where a broker like myself, someone that has a real estate license, goes in and evaluates the value on your home on paper. That's before someone actually usually physically shows up there. I normally have a BPO or a comparative market analysis in hand when I go to a listing appointment. And then from there, you can kind of hone in the numbers because once you see a house, I do think adjustments sometimes are necessary, either higher or lower, it just depends.
Right. Right.
So, I do think that, the market has been very high, right? We've been talking all year about, home prices have gone up and up and up every month, which is great for sellers. But if you're in the fix and flip business, like I don't see how that business model can be sustained. I mean,
Right.
It's just not the right marketplace for that type of business, in my opinion. Now, that's not to say there aren't deals out there, but it's not low-hanging fruit, right? This isn't 2011, right after the recession, where there was a lot of that. But I just think that I always feel like what comes around goes around. Like, I think that Zillow, they kind of got in over their heads, which is fine.
They bit off. They bit off a little
And
bit more than they can chew, honestly.
now they're losing money, and it's hitting them where it hurts the most for all these big major conglomerate companies, and that's the pocketbooks, that's the stock prices. Shareholders are pissed.
Yeah.
And we'll see what happens. I mean, I don't know if this means they're going to stop buying altogether. I mean, they're saying it's on hold for right now. But listen, Zillow's a huge company. I don't think this is going to destroy them by any means. And
Right.
Not necessarily that I think that any company like them should be destroyed. But it's just a good learning lesson, I think, for people to be aware of these companies and what they do, and make sure you consult with somebody local who you trust, like myself or Angelo, if you're approached by one of these companies.
Yeah, agreed. And they were really good at what they were doing, right? They were a lead aggregator. They were very, very good at that. Let's hands down, right?
Right.
But then they evolved. They said they weren't going to become a brokerage, but now they're a national brokerage, right? And I can't really speak to if they're good or not or whatever. But then now they're buying homes, not just a brokerage. Now they're buying homes. So I think if they just stayed true to not trying to look. They lied. They said they weren't going to try to take your business model. They weren't going to try to take over what you're trying to do as an agent. They were.
Yeah.
They are. They're trying to do that, right? So as their premier to whatever it is, I'm just not a fan of that that model, right? If they just stayed true to being a lead aggregator with, on a national level, they were fantastic at it. They were great.
Right.
People buy leads, and that's everybody searches. Just kind of leave it at that. But they kind of, they stuck their hands in too many pots, and they got burned. They're getting burned. Let it burn.
Well, it's funny because I was listening to a podcast a couple of years ago, and the majority of the revenue for Zillow Group or Zillow Inc., whatever it is, came from real estate agents paying to be premier agents in Zillow. And I think that that's sad. And, people, I don't know if they still have premier agent. I don't even know. But it's just something to, I guess everything evolves, right? I think it's only natural for people that are in the business to see money being made and the amount of transactions happening in the real estate space and say, I want a piece of this. Right. This looks easy, right? This looks like low-hanging fruit. And then they get in and they're like, wow, okay, this is different.
Right.
Now we're gonna take a loss on 7,000 units.
Yeah, right. Right. And now those are gonna go on the market. From what I was listening and kind of searching to, they're going to try to unload some of those houses that they're over with. So hopefully some houses come back on the market. I mean, it's not going to fix the inventory issue, but let's be honest. Get them out there.
So
get them out there and get them listed.
That Phoenix had the most homes listed below purchase price, trailed by Charlotte, North Carolina, with 70, and Las Vegas with 52. So Charlotte was in the top 3, it looks like, for homes that they're going to be selling at a loss, meaning they're going to have to sell it or list it for less than they bought it.
Right. Yeah. And I mean, and I've seen some of and this isn't just exclusive to Zillow, right? I've seen the other big ones like Open Door and some of those. I'm like, what did you, like, I've seen them basically take advantage of people, right? Getting it for super cheap and then selling it, right? But I've also seen it the other flipped around where they're paying way too much. I'm like, who made that decision?
Yeah.
Like, what in the world?
Yeah.
In the world.
Yeah. Were you drunk or something that day?
Yeah. So it's interesting.
It is interesting. I mean, we'll see. I think this speaks to I think some of the maybe peaks and valleys that we're going to see over the next 6 to 12 months in the real estate world. I do think it's going to continue to be a strong market, but it's not going to be the market that we've experienced in the last 16 months. I think, which I think is better for the consumers, honestly.
Right. No, agreed. It needs to settle a little bit. I've this last I'd say 2 weeks, I've seen it pick up for me, and it's weird because it's this time of year, everybody like wants this. I'm trying to. It's just it's weird from week to week how the phone calls will come in. It's just, I don't know. I can't quite, and I've been trying to, learn historically. I've been doing this long enough. I'm trying to learn, I'm trying to figure it out. Like what do I need to do to make sure I'm, the calls come in, how to market and stuff. But it's weird. It's like the last couple of weeks, there's been a lot of calls. A lot of people are pulling money out of investment properties because their property is worth so much more money. So that's a big thing. Mm-hmm.
Okay.
There's literally a run on investment properties. Take people pulling cash out of investment properties.
Huh.
Yeah, I've been doing a ton of them.
And so, I mean, you obviously don't know what they're doing with that. It's not they're
buying they're trying to buy new properties.
Okay, that's what I was.
That's their end game is they want to buy they want to buy more properties. So
yeah, I feel like the investment space is definitely going to be competitive.
Yeah.
you know.
Oh, 100%. And you gotta come correct. You can't mess around.
No.
So I remember last week we were going to talk about something else too, the bridge loan.
Yeah, the
Remember?
bridge loan.
Yeah. Anyways, was there anything else we needed to cover on Zillow?
No. I think we beat that horse.
Well, they kind of did to themselves.
Yeah. Whoops. For you.
So I just wanted to pull up my little bridge snippet here. So this is a cool product. I'm coming out. I'm not 100% fully set up with this lender just yet. They're a depository institution, so it's a little bit longer getting set up with them. But it's a great product. It is. In addition to, I mean, I told you about my direct underwrites now. I mean, taking deals off the table. It's fully underwritten, minus of course title and appraisal, in like less than 2 hours for conventional loans. So we'll dive in deeper a little bit on that next week. But bridge loan, it's a depository institution out in the Midwest. I have, of course, the first mortgage is going to be with them as well. It's basically a $500 origination fee. So do you know how a bridge loan works?
Yes.
I guess have you ever?
But break it down a little bit.
So let's say you have a property let's say you want to purchase a property, but you need the funds from your current property to then purchase the new property, right? If you want to put your down payment. I'm trying to get the thing out here. And you need those funds from your current house to put down on the new house. Well, a bridge loan, technically, it's not offered by very many banks. This one particular lender that I learned out at the conference I learned about, so I'm getting set up with them. They offer a bridge loan as long as you have a certain equity position in your current house. What they will do, they will basically take a lien position on your current residence to lend you what's called a bridge. So let's say you need $50,000 to put down on the new house. They'll do a combined loan to value on your current house. They'll give you the $50K, as long as the equity numbers work, right? The $50K to purchase said new house, and then you will pay. It's basically a 6-month balloon term with interest-only monthly payments. So that $50,000, you'll have a small interest-only payment on it while you sell that house. So they'll front you the money from the equity you have in your current home to put down on your new home. And they'll do a maximum combined 90% CLTV. So you have to have, after everything is said and done, you have to have at least 10% equity after they give you the funds in your current home. So that's the max equity position. So you can't be basically maxed in your current house to purchase a new house. You have to have some equity built in your house, right? In order to use some funds to purchase a new house. Yeah, they have a ton of it now, right?
Yeah.
And so the maximum $250,000 loan amount, they can renew it if for some reason the house doesn't sell, which in this market's kind of crazy if it doesn't. They can renew that balloon for another 6 months for a cost of $2,000.
So you said the limit is $250,000.
250,000. You got to have a 680 or above score, and your max debt ratio can't be more than 50%. So it is a really great option if you really want to move. You don't have that money to put down for the new house, and your house has equity, and you feel pretty safe and secure that your home is going to sell within that 6-month time period, hell, even in a 12-month time period. So it's a great, and I don't know how many times I've had people call and say, "Hey, do you offer bridge loans?" I'm like, no, right. I don't. And they came around, and now they're here, and they're here in full effect. So, yeah, it's a great product. Once again, it serves its purpose. Time and a place for all kind of loan products. But if you're in need, it's
and I see that a lot in the real estate world, like where people are like, okay, I have to sell my current house in order to buy my next house, which is like, that is standard, right? That is not uncommon. And
Correct.
so that is where we would call you and make sure that those clients can,
That
that
you,
fit in
yeah,
that
you can use
criteria.
funds, make that work. So you don't have to make a contingent offer. You know, it's not based
Which
on selling the
is
house.
right.
You know what I'm saying? So
Which
you can
is
avoid that
really
contingency.
kind of necessary right now.
Correct.
I mean, I think it'll
Correct.
be very important. I mean, to not have a contingent offer is going to be really important for the next, until we see an ease in inventory, which I don't, I don't see that happening in the next
I don't
6
know
to
when
12
that's going
months.
to happen.
Yeah.
Right.
So
We do
that's
have,
really good.
yeah, it's, I'm pretty excited about it. I mean, I'm just in the final stages of getting set up with them. So, once that goes live, I'll be doing Friday Facts about that and blasting that all over.
Perfect.
So the feds are going to meet. They're going to meet in the coming week. I think it is um, tomorrow. Tomorrow they're meeting
Oh,
tomorrow.
so
Fed
this
meeting
third.
tomorrow. It is a big meeting. It's a long awaited meeting about tapering, their bond, our country's bond buying platform. So we'll see if they come out and say we're going to scale back, we're going to ease back on bond buying. Lock your loans, everybody, because rates are going up. Literally, and of course, if they don't say that, then we're going to kind of stay where we're at. But if they come out and with a strong sentiment about, yes, we're scaling back our bond buying, whatever, it's gonna be bad news for bonds. I mean, not bad news, right? I mean, the rate's still gonna
Right.
be good, but it's gonna just kind of it's not gonna kick that can down the road anymore when it comes to making that decision about scaling back or rates rising. It's gonna kind of put that in first gear to start going down the road.
What's your prediction?
I think they're gonna scale back on it, on buying. So I can see rates ticking up. So yeah, if you don't have, if you're locking, or if you're buying a house within the next 30 days, 45 days, 60 day, I think you should probably lock ahead of this meeting. But you know what? It could go the exact
Right.
opposite direction.
Right. Yeah, of
If they do
course.
say, and then the opposite too, if they say, you know what, we're not going to stop, we're going to keep on printing money, then we're going to see the reverse. We're going to see rates, kind of getting a little bit better. But I think just from everything else, I think we're going to see some. I can see that they're going to start talking about tapering. Rates
Do
will be
you
going up.
think any of this, any of these infrastructure plans, that bills that they're trying to get passed, does that affect this at all as well?
Not if,
Or,
I mean, that deals with the inflation, so 100%. I
yeah,
mean, you can only add so much debt. I mean, trillions and trillions. And have you seen some of the things that they're talking about? Like, it's like
yeah, I mean,
mind blowing.
I know. I mean,
Anyways.
some of it, like, I think, obviously we don't really get into politics a lot, but I think it's important. A bill of some form is going to pass, right? We can debate
Correct.
all day long what is necessary, what is not necessary. Um, I haven't read what's in it. I'm sure there is a lot of fat in there.
There is a lot of bloat. There is a ton of bloat in it. Yeah.
um,
You do a deep dive, but yeah.
I mean, there's some things that I've heard have already been cut from the news that I would have liked to see, like, paid family leave for a little bit longer. I mean,
Yeah.
just because, the daycare thing is like boggles my mind.
Right.
But, I think,
Yeah.
I think we'll see. So that's interesting. So depending on the dollar figure with that passes, which is going to tell us a little bit about inflation.
Well, yeah. I mean, you're going to see, it may not, you may not see like a direct, immediate correlation to
Right.
rates rising, but I mean, the more
In the
spending,
long
the
term.
more long term. I mean, it's just bad. Inflation's already kind of on the rise. So, I mean, and let's talk about these jobs reports have been like sucky, like real bad,
Yeah.
right? And it's
Yeah.
Yeah. So
That's not good. And so that's bad for the economy, right?
it is. So, well, yes, it was right, bad for the economy. So, and just kind of think of it as this. It's a kind of a very simple breakdown. When you have people that, or when you have an economy that there's not, let me put this the right way. If you have unemployment rates that are very low, that means a lot of people they're working. There's a little number of people that aren't working. And they're working, they're making money, so they have money to pay for things, to spend money. Okay. The more the economy does not have, the I guess the workforce, the more unemployed people there are, the higher the rates of unemployment, the less money there in the market. That's why they have to keep the rates and everything else low, so people do spend. So it's cheaper for things to buy things. That's kind of, more money more people working, the more money they have to spend, the higher the rates. Less money, the less people are working, less money they have to spend, the lower the rates. Does that make sense?
Yeah, that's a good breakdown.
So
Well, I mean, so it'll be interesting to see, I guess, what happens this next week. Because I
yeah,
think that bill is probably going to be passing, I would say, pretty soon.
soon. Yeah, I would say more debate, just back and forth.
Yeah.
But
And then the Fed will meet,
yeah,
and then so
tomorrow. Interesting to see tomorrow what's going on, because you can actually watch, if anybody's curious about that, you can actually go into like C-SPAN and like actually watch Powell speak. And you literally, and when you watch Powell speak, this chart that I have that I've showed you before, it'll literally like on his speech of what should, it's nuts.
Right.
It really
Like
is
if he
crazy.
sneezes,
Yeah.
it jolts.
Right. Yeah. But it's interesting to see.
That is interesting. Well, cool. So next week we'll have a lot to talk about with that as well.
Yep.
Then.
And I'll do a deep dive next week into our no more pre-approvals, pre-qualifications, out of here. Thing of the past.
Direct underwriting.
Thing of the past. We're revolutionizing your offers. You're going to go in there with it's going to be basically evolving into to government loans, but right now it's 640 and above credit score. You'll have a preliminary, you have a conditional underwrite within 2 hours. So if you're going to make an offer on a property, you're going to have, let's say 10 offers on a property, and one of those offers is a conditional underwrite versus 9 are going to be pre-approvals. Which one's going to win?
Yeah, the conditional
They're all
underwrite.
basically the same. Correct. All day.
I mean,
so
that's huge.
strong.
Yeah, that'll be a really good topic to go into detail about why that's important and how that's going to help you as a buyer. So that'll be good.
Buyer, agent, it's a win-win for everybody. Safeguards. So love it.
Awesome.
So,
Go team.
All right. Well, thanks everybody for tuning in. All right. Stay tuned next week. Thanks for tuning. Thanks for watching us. Please like us, follow us, share us. Anybody wants needs a good rock star agent. Ashley Hannah, she's a girl.
Our mortgage broker.
I'm a guy.
That's right.
Well, we will see you next week, everybody. Stay safe.
Thank you. Bye-bye.
Bye-bye.